Hello class, welcome to this lecture. So today we will discuss determining the extent of testing, focusing on particular method which is the audit sampling. So we already introduced the concepts in our previous discussion. We mentioned that in audit, so we do not necessarily select all available items for testing. There are instances wherein we select specific items for testing or all the items for testing. However, in many cases, especially if there are numerous documents involved, voluminous transactions involved, so we normally employ what we call the audit sampling method. So for this section, we will discuss audit sampling and other selective testing procedures. So for these topics, we will use PSA 500 on our audit evidence and PSA 530, audit sampling and other selective testing procedures. When we perform our audit procedures, like for example, test of controls or substantive test, so we have to decide which items do we select from the population of the documents of our client to be subjected to our validation. So let's say we are auditing the sales transactions of our client. So the population from which we wish to draw our conclusions from could be the invoices sent by the client to the customers. So let's say we are performing test of control. So we want to check whether, let's say, the customers indicated in the invoices are valid customers of the client, no, approved customers of the client. We want to check if the amount of transactions fit in the credit limit of that customer. So those things are what we are trying to test in certain test of controls, for example. So we have to decide so which items from the pool of invoices of our client should we include in our testing or in our validation. So there are three ways on which we can select items. So number one, we have what we call 100% testing. So in this case, we will examine all the invoices so sent by our client to the customers. Another is selecting a specific item. So using our judgment, we will select specific items from the invoices. So let's say we'll set a limit or threshold. All transactions above 10,000 pesos will be selected for testing. So that is specific items. And finally, we have audit sampling. So when we say audit sampling, we use the science of statistics in determining samples that are expected to be representative of the population. So meaning to say whatever conclusion we draw from the items that we have selected are expected to be true when projected to the rest of the population. Okay? Now, when do we use these different means of selecting items? We use 100% testing on limited circumstances because we cannot always do 100% testing, especially if there is a large number of items involved on the documents of our client. That is why 100% testing is done normally if there are only a small number of high value items involved. So if the population is very small and it's possible or feasible for us to perform 100% testing, then we can test all the items from the population of our client's documents. So another, if there is a presence of a significant risk, so we cannot afford not to test less than 100% of that items, then we can test 100%. And finally, if it's feasible, through computer-assisted audit techniques. Like for example, the population, the document of the client is in electronic format, and all of those transactions can be covered. So using computer program, like an audit software, then we can test 100%. Okay? So for specific items, as mentioned earlier, so we use professional judgment in selecting specific items. So like for example, selecting items higher than specific amount or based on a certain characteristic. Now, let's say we will select items that involve transactions with related parties. So because this is aligned with our audit objective that we are trying to do in this specific procedure. So that is selection of specific items. And when we say audit sampling, so we test less than 100% of the population, but expected to be representative of the population. Okay, so because there's science behind it, no? Like for example, the normal distribution. So in audit sampling, it involves application of the audit procedures to less than 100% of the items within a class of transactions or account balance, where the samples that we have selected are expected to be representative of the population. So meaning to say, so following the theory of probability, so in statistics, those items that we have selected for testing are expected to be representative of the condition of the rest of the population. So this is the same science being used in, let's say, for example, surveys. If conducted properly, so whatever conclusion you draw, from the selected items would be true to the rest of the population. Okay? So in this approach, so all sampling units have a chance of selection. So this is the distinctive characteristic of audit sampling compared to the other selection method earlier, wherein we select specific items. So because in that mode, when we select specific item, let's say transactions above 10,000, then not all population, not all documents have a chance of being selected. So of course, those uh, documents or transactions below 10,000 would no longer be selected or would no longer have a chance to be selected anymore. But in audit sampling, so regardless of the amount, regardless of the characteristics, so all sampling units, items in the population, have a chance of being selected. And in this case, this is considered as a reasonable basis of the auditor to base our conclusion in the population. So even if we did not, or if we would not audit 100% the population, so the tests that we perform on the selected items using audit sampling are appropriate basis already to base our conclusion. Now let us discuss some key definitions that we will be using in this topic. So first, we have errors. So when we say errors, errors are either deviations in test of control and misstatements in substantive test. So in test of control, the numerical amount is not yet significant. So what we are trying to test would be the presence or absence of the attribute, okay, or of the expected process or control in place. Now, like for example, so let's say a company has this process or control wherein the sales order before processing should be approved by the credit department. So there should be a signature of the credit officer in the sales order. Okay? Now, if for example, the a sales order has been subsequently processed by let's say the shipping department and the billing department without the approval of the credit department, then that is considered deviation in the control. Okay? So that is considered an error. So regardless whether the amount is correct or even if the transaction is valid. Now, let's say at the end of the day, the customer's credit limit was not breached. Okay, it was processed without the approval of the credit officer, but anyway, the amount did not breach the customer's credit limit. So even if the transaction is valid, however, the approval of the credit officer was not obtained at the onset of the transaction, which is a required part of the process of the client, then that would be considered a deviation. Okay, and therefore considered as an error. Okay, so now for misstatements in substantive test. So misstatements, so these are the difference between the amount required by our reporting standards like PFRS and the amount recorded by our client. So let's say the client recorded an amount, okay, so which is different from the correct or supposed to be amount, then that is considered a misstatement. So this time the amount is considered, no, the monetary amount is considered in determining whether there are misstatements or not in substantive testing. Okay? And we have different types of misstatements or errors. So we have factual misstatements. So misstatements about which there is no doubt. Now, like for example, the client recorded the sales transaction at 100,000, but the correct actual amount is only 80,000. So the difference of 20,000 is considered as a factual misstatement. So judgmental misstatements, these are differences arising from the judgment of the management concerning accounting estimates that the auditor considers unreasonable, or the selection of application of accounting policies that the auditor considers inappropriate. Now, like for example, in recording depreciation of PPE, property, plant, and equipment, let's say the client use an accounting estimate that is unreasonable. So let's say in depreciating the machinery, the client use 100 years when the reasonable estimate should only be between 5 to 10 years for that machinery. So therefore, the difference in depreciation expense using 100 years compared to 10 years would be considered as a judgmental misstatements. And then finally, we have projected misstatements. So this is the auditor's best estimate of the misstatements in the population, involving the projection of misstatements identified in audit samples to the entire population, so from which the samples were drawn. So like for example, you are auditing accounts receivable. So let's say the total amount of accounts receivable is 1 million pesos. But you have only audited a sample with a total amount of 100,000 pesos. You did not audit the entire population of the receivable. Now, out of 100,000 pesos, you found a misstatement amounting to 10,000 pesos. So that 10,000 pesos is considered factual misstatement. However, the 10,000 pesos pertain only to the 100,000 of receivable that you have tested. The rest of the receivable, for example, the 900,000, you were not able to test it. So because you use sampling. But you need to project the error you found in the sample to the rest of the population. So let's say you use the ratio of the amount of the error. So let's say 10 over 100,000 is 10%. Then most likely, the error in the rest of the AR would also be 10% times 900,000, which is 90,000 pesos. So that 90,000 pesos is considered projected misstatement. So it's not a factual misstatement because you were not able to identify those misstatements in your testing. You only projected it from your conclusion in the samples that you were able to test. Okay? So next, total error. So total error is the rate of deviation or the total misstatement. So uh, let's say in a test of control, let's say you are testing the credit approval of sales order. Out of 10 sales order, one does not bear the signature of the credit department or credit officer. Then the rate of deviation is 1 over 10 or 10%. So the total misstatement, this is the difference between the amount recorded by the client and amount that should have been recorded. Next, we have the expected error. So the expected error is the error that the auditor expects to be present in the population. So normally this is something based on your experience with the client in prior period or similar clients from the same industry. Next, we have an anomaly. Anomaly is an error that arises from an isolated event that does not recur other than on specifically identifiable occasion that is not representative errors in the population. So the relevance of anomaly is that when you are projecting the errors to the population, you have to exclude the effect of the anomaly. So because they are considered as a non-recurring or isolated transaction only. Okay, so let's say you are auditing receivable, similar to our discussion earlier. So the total population is 1 million. You audited only 100,000 worth of receivable. And you find the misstatement amounting to, let's say, 12,000 pesos. However, 2,000 of that 12,000 pertain to an isolated event. No? An error arising from an isolated event, for example, during that time when the transaction was processed, there was a glitch first time encountered by the entity and not expected to be repeated again. So in that case, you have to exclude that when you project the error to the rest of the population. So because that error is considered an anomaly. Next, we have population. So population is the entire set of data, so from which a sample is selected and about which the auditor wishes to draw conclusions. So for example, you're auditing sales transaction. So it's possible that your population will be the invoices issued by the client. So for example, the invoices issued by the client during the period is from invoice number 100 to invoice number 10,000. So the invoice number 100, 101, 102 up to 10,000, that would be your entire population for that test or for that procedure. Okay? Or if you are auditing, let's say, you are auditing property, plant, and equipment, so therefore your population would be the property, plant, and equipment, the PPE tags located in the PPE item of your client. So that will be your population. Usually it has a serial number. So those serially numbered PPE, the serial numbers of the PPE would be your population in auditing that account balance. And the sampling unit is the individual items constituting a population, let's say an invoice or a PPE tag. So that will be your sampling unit. So stratification is the division of the population into groups. Now, like for example, you are auditing sales transaction of the client. So you can further subdivide it into, let's say, sales to institutional customers like the corporation and sales to individual customers. Or it's possible also by geographical area. So sales in this region versus sales in other region. Okay? So that is stratification. We also have to consider the procedures where we do not use sampling at all. Okay, so there are certain instances wherein we do not use sampling or audit sampling. For example, in procedures such as inquiry and observation, so we do not use sampling procedure. Okay, we do not also use sampling in analytical procedures because in analytical procedures, our examination is high level. Okay, we are not going into details of let's say the invoices or the PPE tags, but rather we apply our procedures in analytical procedures on the total amount. So we do not also apply audit sampling to procedures that we need to apply on every item. Okay, so because what will be more appropriate here will be the 100% testing. And then finally, in sampling, we need an audit trail. No, we need a sampling unit, which is either a document or source document, no, wherein there is an identifier like sequence number or control number so that we can examine it in our audit procedure. Okay. Next, we have audit procedures and sampling. So therefore, where do we use audit sampling? No, if we cannot use audit sampling in the areas mentioned in the previous slide, where can we use it? So can we use audit sampling in risk assessment procedure? So generally not applicable. So except only if the risk assessment procedures is performed in conjunction with test of control. So because in test of control, we use sampling. So we use it in testing the presence or absence of attributes. So this is the one that I mentioned earlier. So let's say you want to test whether the credit department signed off a sales order. So that is an example of attribute of control. Okay. So another example, let's say whether the accounts payable clerk has matched the amount per invoice per shipping document or receiving report. Okay, so that is another attribute of control that we expect to exist in processing, let's say, accounts payable transaction. And finally, in substantive tests, we also use sampling, but in test of details only. So we do not use audit sampling in substantive analytical procedures because, as discussed, no, in analytical procedures, we do not use audit sampling concept. Okay? So another is dual purpose test. So we have discussed this in our previous topic in substantive testing and audit documentation. So this is a test which which is used no, on both test of control and substantive test. Now, when we perform dual purpose test, we can use the same set of sample used to test a control and to serve as substantive test. However, we select the sample size. Now, the sample size is the amount of documents or sampling unit that we have to test as the higher of that required for the two purposes. Okay, so let's say we are testing inventory items for control and at the same time performing substantive tests on it. So that is a dual purpose test. So if, for example, in test of control, the required sample size is 35 items, while in substantive test, the required sample size is 45 items, then both tests, now whether TOC or substantive test, would be performed using 45 items. So the sample size as the higher of that required for the TOC and the substantive test. So next, risk. So of course, when we use sampling, since we test less than 100 items, there will always be some risk involved. Okay? However, we cannot remove the risk 100%. So because if we want to eliminate uncertainty, it can result to undue delay or cost. Now, let's say the client has 1 million transactions during the year. So to eliminate uncertainty, you test all of the items, all 1 million items. However, by doing that, there will be undue cost or delay on the audit process. So that is why it's acceptable to use audit sampling. So the audit sampling, we apply it to the population. So in such that we only test a representative sample. Okay? So, but because this is only less than 100% of the population, there is a chance that this sample or these items are not representative of the population. So that is what we call sampling risk. So sampling risk is the risk that the selected items are not representative of the population. Therefore, whatever conclusion we draw from the selected sample might not be true with respect to the population. So that is why this is the factor that we need to manage, the sampling risk. Okay? By applying a logical and systematic approach in performing sampling procedure, we can manage the sampling risk. Okay? However, we are not only faced with sampling risk. So we also have to consider the non-sampling risk. So non-sampling risks are the risks that the auditor reach an incorrect conclusion for reasons other than the sampling risk. So remember, sampling risk is the risk that the items that we have selected are not representative of the population. Now, even if we select items that are representative of the population, so let's say we have selected an items and those items are representative of the population. Whatever conclusions we can draw from the sample are true with respect to the population. However, there could still be non-sampling risk involved. Okay, so what are the example of non-sampling risk? So the auditor can select an inappropriate audit procedure. So we may be correct in selecting the items, but we might apply the inappropriate or incorrect audit procedure. So therefore, end of day, we will be arriving at an incorrect conclusion also. Or the auditor misapplies the audit procedure. So you have selected the correct or appropriate audit procedure, but because the staff is inexperienced, he was not able to apply it correctly. So leading also to an incorrect conclusion. Or another thing, the auditor misinterprets the result. So meaning to say, you applied the correct procedure, or you selected the correct procedure, you applied the correct procedure, but there's a problem with respect to interpretation. So you misinterpreted the results of the procedure. So because of this, even if your samples are correct, even if your samples are representative, you can still lead to incorrect conclusion. So that is why, as auditors, we also have to manage non-sampling risk. Okay? Now, in sampling risk, we can manage it by appropriately designing the sampling procedure, so appropriately selecting the sample so that it will be representative of the population. That's how we address sampling risk. For non-sampling risk, we can address this by providing training, guidance, supervision to the staff to those less experienced member of the audit team. So to avoid these instances. So by properly managing the audit team, so we can manage non-sampling risk. So next part, general approaches in sampling. So in sampling, we have what we call the statistical sampling and non-statistical sampling. In statistical sampling, we use the theory of probability or statistics in deciding our sampling plan or in designing our sampling plan. So in non-statistical sampling, no, so we use our judgment. So instead, the science or the laws of probability. Okay? But which is more effective? Statistical sampling plan or non-statistical sampling plan? So actually, both can be effective, or non-statistical sampling can be as effective as statistical sampling. Okay? The only advantage of statistical sampling is that in statistical sampling, we can quantify the sampling risk. So this is what we call this better in terms of quantifying the sampling risk. So because in non-statistical sampling, this can be as effective as statistical sampling. So meaning the conclusion can be similar with what we can achieve in statistical sampling. But in this case, we are not aware or we are not able to quantify the sampling risk. Okay, so statistical sampling, since we need to use tools, we use to know, we need to have a knowledge to use this is more costly. So compared to non-statistical sampling, which is less costly and easy to use. So ultimately, it will depend on the auditor's professional judgment. So when to use statistical sampling and non-statistical sampling in performing his or her audit procedures. Next, let us proceed to the different types of statistical sampling plan. We have attribute sampling and variable sampling. So attribute sampling, we test for the rate of occurrence. So like what my example earlier, now let's say out of 10 instances wherein the control is expected to apply, in one instance, the control is not applied, okay, regardless of the amount or regardless whether the transaction is valid or not. So therefore, 1 over 10, that is the rate of occurrence, 10%. So we use this attribute sampling in test of control. So another term for attributes is characteristics. We are testing the characteristics of control. So whether, for example, the credit department has signed off in the document, whether the appropriate officer has signed off in the appropriate document, so whether the amount in one record has matched the number or quantity in another record. Okay, so those are examples of controls that we can test in attributes sampling. So in variable sampling, we test for the peso amounts or units. So we use this in substantive testing. So in this case, the monetary amount is already significant or important. Okay. So unlike in attribute sampling where we are more concerned in the application or non-application of an element of control. Next, we have what we call sample selection method. So this sample selection method means this is the specific way of selecting the units from the population once we have determined our sample size. So let's say the client had 100,000 sales transactions during the period. So represented by 100,000 sales invoices. And then we selected our sampling approach, no? So we have selected our sampling approach, let's say statistical sampling approach, and we have determined a sample size. So a sample size is, let's say 1,000 units out of 100,000 units. So in that case, to select the 1,000 units out of 100,000 units, we have to select from these different sample selection methods. So we have two types, probabilistic and non-probabilistic. In probabilistic, each population item has a known probability of being included in our sample. So that is why, guys, in a statistical sampling plan or approach, we can only use probabilistic sample selection method. So either random sample selection, systematic sample selection, or PPS, probability proportional to size. Okay? However, if our sampling plan is non-statistical, then we can either use probabilistic and non-probabilistic sample selection method. So in a non-probabilistic sample selection method, so selecting item, we use a judgment, no, to approximate a random sampling approach. So the choices here would be haphazard or block sample. Okay, but you can also use probabilistic if you are using a non-statistical sampling approach. Again, if you are using a statistical sampling approach, you can only use probabilistic sample selection method. So let's discuss one by one. Now, this sample selection method. So, but we limit it to random, systematic, haphazard, and block. We'll discuss later PPS. So, toward the end of this lecture, we have an example of PPS. So first, we have a random sample selection. So under random sample selection, so each population item has an equal chance of being included in the sample. We use this when there is no need to emphasize one or more types of population items. And normally we can use random sample selection if the population item has an identifier. Like for example, sequential invoice number. Okay? Or document number, no, sequential document number. So numbers that are numbered consecutively. Okay, for example, invoice number 1, 2, 3, 4, 5, and so on and so forth. Okay, so this random sample can be generated using different ways. So we can use electronic spreadsheet like Excel or Google Sheet, or random number generator. So these are software that generate random numbers, or use of generalized audit software. So wherein it has an inherent capability of generating inherent number for testing purposes. Okay? So we cannot use random sample selection if, for example, the population items are not arranged consecutively. Okay? So like for example, so let's say the numbers are not consecutively arranged. So it will be difficult for us to locate the specific item from the population if the items are not consecutively arranged. So in that case, that is a disadvantage. So we can use the systematic sample selection. So in systematic sample selection, the auditor calculates an interval and selects the item on the sample based on the size of the interval. So the interval is the population size divided by the sample size. So like for example, the population size is 100,000 and you want to select a sample size of 1,000. So your interval is 100,000 divided by 1,000. So therefore, the answer is every 1,000. So every 1,000, you will select that particular item. So even if the units are not consecutively arranged, so you can use systematic sampling. Okay? So this is easy to use, but there is a possibility of bias. Okay? So like for example, if let's say the numbering of the population unit has some sort of characteristic. So let's say you are auditing the payroll of the client, and your population is the employee number of the personnel of the client. If let's say the client has a specific way of numbering its employees, like for example, all expats will have a zero ending employee number. Okay, so if you are an expat employee, your employee number would automatically fall under zero. So in that case, there's a chance that some uh, items in the population will be selected too often or not at all. So let's say the interval is something that would skip every zero in the population, then there is a chance that those expat employees will not be selected in the sample. Okay? Or for example, the interval land exactly every zero. Okay? And then therefore, most of your items that would be selected would be expat employees. So there will be a bias. Okay, so that is why you have to be careful in understanding the population first before you apply systematic sample selection. Next, we have haphazard sample selection. So selection of items without conscious bias by the auditor. But at the end of the day, it is difficult to remain to be completely biased. For example, if you are just selecting items without conscious bias from the population, so there's still a chance that you will have a certain bias in selecting specific items from the population. So that is why this is less preferred compared to random selection method and the systematic selection method. So those two selection methods are more preferred compared to haphazard sample selection. So for block sample selection, so the auditor select first item in the block and the remainder of the block is chosen in sequence. Now, like for example, you're auditing invoices from January 1 to December 31. Then you selected an invoice dated February 1. And then you need 10 items. So you select the invoice on February 1 and then the 10 dates after February 1. So it's a block. So February 1 to February 10 invoices, those would be subjected for your testing. Okay, so there's a chance that your sample would not be representative of the entire population if your population is January 1 to December 31. Okay, so because you would have selected only a specific week, no, February 1 to February 10. So therefore, it might not be effective in certain tests. Okay, however, it is applicable for certain procedures, like for example, cut-off test. So in cut-off test, you have to select a sample based on a short time frame, and block sample selection would be applicable in that scenario.